All right, Michael. Well, it's good to finally meet you in person. I know we've met a few times remotely, but it's good to finally meet you in person. Thank you for doing this session with us.
Yeah, no, we're excited to be here. We're excited for you. We're excited for SHAED, your launch of commercial EVs, and excited to be a partner.
All right. Well, my name is Eddie Schick. I'm the CFO of SHAED. Here joining me, I have Michael Baer from Nugen. Michael, you mind giving yourself a quick little intro?
Yeah, so I'm Michael Baer from Nugen Captial. I oversee our e-mobility solutions platform called Nugen Go. Nugen Captial is a renewable energy infrastructure investor, owner, and operator. So we like to hold in long-term clean energy assets. That includes solar storage and EV solutions for fleets.
Awesome. Well, yeah, great. I'd love to talk to you a little bit about financing, commercial EVs and related charging infrastructure.
Mm-hmm.
So what have you seen lately, like as far as trends in the industry, specifically related to commercial EV financing and infrastructure financing, and how have those trends evolved over the past couple of years?
Yeah, so I think we should just start with the commercial EV market first, right? I think EVs in general are going to explode. It's probably taken off a little bit slower than people expected with the IRA and the Inflation Reduction Act coming, but more OEMs are putting new vehicles on the road, which I find really exciting. Then you have regulations, right? So you have Advanced Clean Truck Rule, Advanced Clean Cars, air quality mandates, and you have ESG mandates from corporate. So I think that trend will provide an acceleration of the move to commercial EVs in the future. But as an industry, in terms of financing, it's still new. And when you have a new technology or a new type of industry, rates are high. Traditional capital partners may pull back and see what plays out because they view that there's a risk here. But you do see new business models popping up. Your fleet as a service business models, your off-balance sheet turnkey solutions, and that's what we see at Nugen Captial. We provide a turnkey off-balance sheet solution to help really simplify the process for people who want to pilot EVs when they're not sure yet. But overall, I think as the industry and market grows, we'll have more data, and I think that's really important to really understand how these vehicles are performing in real time. And then just like any other industry, traditional capital will come into play, rates will come down, and I think what you'll see is probably a traditional lease.
Absolutely,
right?
Yep. So outside of, I know you mentioned high interest rates. Outside of that, what are the other roadblocks and challenges that you've seen so far?
Yeah.
I know you touch on data. That's a great big thing for us as well, tied to the residual value. Like what's the vehicle, what are the characteristics, what's the vehicle going to be doing?
Yeah.
From your perspective, what else have you seen as far as challenges?
I think there's headline risk, right? So I think every once in a while you might see a battery fire, right? Whether it's a passenger vehicle, a bus. So you have concerns about electric vehicles and their fire safety. You mentioned residual values, right? I don't think the industry or the finance industry yet knows how to underwrite the residual value, and that's not just from what's that second use case or second life of the battery, but are there opportunities to monetize that battery when the vehicle is not being used as part of the fleet solution, right? So overnight, off peak, when that vehicle can actually be an asset. And then if you actually use that battery to, say send power back to the grid and monetize the energy that's in the battery, how does that relate to your insurance, your warranty risk, the ability of the vehicle to actually operate and what it's supposed to do for a fleet? So we see that in terms of residual value and battery risk, as something that's really interesting. I also think technology and OEMs, right? You have a lot of new OEMs in this, we'll call it the medium duty space. There's balance sheet risk. We as an entity have to underwrite kind of their technology and make sure we're comfortable with their ability, right, to proceed as a going concern as a financer if we're going to own the assets.
Yep, absolutely. So I want to shift the conversation to incentives a little bit now.
Yeah.
So I know we've been seeing an increase in incentives out there, especially on the state level with California HVIP, New York, NYSERDA, New Jersey, et cetera. Yeah. So how have the incentives impacted the financing landscape? And do you think we're there yet? How much more work do we have to go? What's your perspective on that?
Yeah, our perspective is at this point in the market with the increased cost of an electric vehicle versus a traditional ICE vehicle, you need incentives to drop the upfront cost, right? There's sticker shock when a fleet looks at a Class 8 EV or even a Class 4 EV electric vehicle shuttle that's $250,000 versus $125,000. So kind of what we see in the market, states are leading, right? States are leading with kind of upfront incentives to kind of pilot or test these vehicles for fleets. because they're unsure, right, if the duty cycle ultimately will work for them. But what that does is it helps reducing the upfront cost. You can get to that total cost of ownership parity. So I think ideally with an upfront incentive, combined with a $40,000 commercial clean vehicle tax credit from the federal government, which really doesn't move the needle. So you kind of need that state incentive. With Nugen, we can monetize all of those and kind of give you an annual or a monthly rate that's flat that will help you get to parity much faster by spreading out that cost over kind of a longer term.
Yep. So you include that basically in the cap cost of the lease price.
In the cap cost, and we can also provide charging. We can also include charging infrastructure too, because fleets don't understand what charging may be, what requirements they may need. We've been working with utilities on the solar side of our business, so we understand that interconnection process. But we like to take all of that complexity out, right, and provide it for kind of turnkey for our customers.
Absolutely, it's a great model.
Yeah.
So next, I'll turn the wheels to the investor interest. Obviously, in the past few years, we've seen a lot of emphasis on sustainability. Wall Street's been investing in the industry. A lot of money been pouring in. So in your view, how has that impacted the commercial electric vehicle landscape, and what does that mean for fleets looking to transition to sustainable solutions?
Yeah, I think what we're going to see is I would think traditional finance is what's going to win out over the long term, right? You did say a lot of investor money went into we'll call it ESG type investing.
Sure.
We don't need to use those words, right? It's a better business model, right? If there's a better technology solution, it's kind of like when the iPhone came out. Right, it took over the BlackBerry because it was a better solution, right? I think you're going to see that with commercial EVs too, and it's not going to be an ESG investment anymore. It's going to be it's going to be an investor's normal portfolio, which we're excited about, and that means again, more capital costs come down because you're not chasing these higher returns that people think are risky.
Yep.
But how will we get there? More data, right?
Absolutely.
More data. What's the residual value? Manufacturing processes will become much cleaner, so that upfront cost will also come down. So with that confluence, I think you can drive a lot more investment really quickly.
Absolutely. So whenever you're structuring your commercial vehicle deployment deals, what's your process for assessing risk management, and how do you overcome those risks when you're underwriting your deals?
That's a really good question. So we look at it two ways. One, we'll look at the technology risk of the vehicle, right? So we'll look at the balance sheet of the OEM, we'll do due diligence, we'll do site visits, we'll test drive it, and we'll understand kind of what could go wrong, because the last thing we want to do is provide a solution to our fleet customers that has an issue, right? That looks bad on us. So we want to be really comfortable with the vehicle solution and charging technology that we are providing to them. So that's kind of our first step.
Yep.
And we'll work through insurance and kind of warranty management opportunities if we feel that there could be a concern in a couple of years. So that's one process. The second type of due diligence I think we do is we like to ensure that that actual vehicle fits the fleet's needs, right? So we'll work with them through a fleet study, look at their duty cycles, and ensure that if they're a last mile delivery operator, that they can make an entire day without charging, or we'll help them provide managed charging solutions during the day so they can operate their vehicle like they typically would. And then the third step is really just underwriting that fleet customer. So it's traditional due diligence, very quick, right? Credit quality, their ability to repay us, and we can do that very, very quickly.
Yeah, agreed. Yeah, from my view, I think the common theme here is that it's going to take time and take data, understanding route characteristics, vocation. Does the vocation fit that particular fleet? So it is going to take some time, and I think over time, we'll be able to generate that data to streamline the process and make it more a traditional financing model.
And I also think getting drivers comfortable, right? I think there is this inherent scariness about moving from one technology to the other. But what we hear from our fleet partners and drivers we work with is it's quieter, it's cleaner, right? You're not breathing in diesel fumes, and it's a better just overall experience. But they have to get over that hurdle first. So, things like SHAED, this education opportunity is really what's going to help move the industry forward and accelerate it much faster than I think it would without it.
Absolutely, that's the goal. We want to be basically a data aggregator. We want to educate the end users and turn over, these leads with all that kind of diligence already completed beforehand. That's where we're striving to. All right, so last question here. Sorry. So in the commercial EV landscape, what are the most promising opportunities for growth? And how is Nugen, positioning yourself for that growth?
Yeah, I think, in the future, what we're trying to do is become a fleet's partner. We're not here to sell you an electric vehicle solution that's not going to work. So we want to be your trusted kind of electrification transition partner to help you go from today, maybe one vehicle in your depot, and help you figure out charging if you can't get interconnection. So maybe we bring in a mobile Moxion battery that can help you get to your transition goals today rather than waiting for the utility to expand. And then walk them through all of those things that they may not think about. So we'll oversee energy reporting, right? We'll help them manage their energy, making sure the power that's going into their vehicle is clean, right? So we're going to provide this wrap solution for them. So one, they can meet their business goals, they can meet their environmental goals, they can be better stewards of the community. So I think what you're going to see in the future is these PPA-like, it's like what solar was in the past, right? It's going to be a power purchase agreement. We like to coin it an electric vehicle agreement, right? For fleets where they don't have to worry about where the power is coming from, where the vehicle's coming from, where the charging's coming from. They just drive it, plug it in the morning, wake up, and it's there ready for them to use.
Pay a monthly operating lease payment.
Monthly operating and lease payment, including with charging and potentially energy, energy wrapped as well, right? So they don't have to think about spikes, right? And potentially, electricity prices, which, I think as we electrify everything, there's going to be like more strain on the grid. So if you can simplify that and help them kind of manage the economics and their business better, that's going to be hugely value add for them. And I think we're going to see this. We're positioning ourselves really in that kind of like port area, last mile delivery, where it makes sense today. Mm-hmm. And we also work with trucking associations really on the education side because they know it's coming, right? They don't love the regulations. They know it's coming, but how can we get them over those fears? So we're just really positioning ourselves as a partner. And when it's right, and it doesn't have to be right today. It could be right in a year, and we just want to be there for them and provide valuable knowledge and information, and then a simple, capital solution for them.
I love that. Yeah, that's a big differentiator for you guys because what I've seen in the market is that a lot of these companies want to fund, $10, $20 million projects. Yeah. But the reality today is that it's going to be onesie, twosies, get your feet wet, and grow organically into it.
And onesie, twosies is expensive. Again, right? It's hard to do a $250,000, $500,000 project when people like traditional capital is used to doing $10, $20 million in one transaction. And so we're here to help them bridge that, right? And then accelerate it when the time is right.
I love that. All right, Michael, that's all I have. So thank you. Thanks again for stopping by, and we'll look forward to seeing you this week.
Yeah, thanks for having us. I appreciate it.